Ticker symbol QCOM is up over 56% in the past year. And today we'll be looking at a large cap which has significant economies of scale, which has a wide existing moat as it currently has solid fundamentals, efficiency ratios which are okay but they haven't been rising in the past year, and a very extensive patent portfolio. So today we'll be looking at Qualcomm, a semiconductor company. So in their annual report, they state that they're the global leader in the development and commercialization of foundational technologies for the wireless industry. This is full of big words, but what they really do is that they offer 3G, 4G, and 5G connectivity, as well as low power computing and on-device artificial intelligence. So they provide chips and technologies for these applications and even more. They currently have three main segments. First of all, QCT, which is based on integrated circuits and software. Then they have QTL, which is based on the licensing of intellectual property. And this is where I believe that their wide moat and their largest part of their competitive advantage is actually developed. And then finally, they have QSI, which is where they have their strategic investments. So for example, if we look at Alphabet, QSI would be, for example, their other bets segment, which is where they gather some of their most promising intellectual property and they develop them in-house to become full-sized companies and leverage them to grow the company even further. So currently Qualcomm has over 200 5G license agreements, which are basically very similar to patents, and they have many more that are being developed for 6G, for artificial intelligence, and for many other uses. Their strategy can be divided into three main parts. The first one being that they want to keep focusing on innovation as they have been done previously, and expansion into two sectors which are starting to heavily leverage wireless technology, which is what Qualcomm specializes in. Number two is that they want to invest significantly in research and development, particularly in some technologies which include 5G and future 6G, and also any advancements in AI. And number three is that they want to enhance their QSI, which is their strategic investment segment, in order to explore new opportunities while also pursuing exit strategies for these investments. So what they're running here is kind of like a startup lab, where they will grow full-size companies and then sell them to other companies for huge profits. Now, the financial analysis for this company is incredible as they have a return on capital employed of 23%, which is way above our 15% threshold. They have an interest coverage ratio of 8 times, which, although is not 10 times as we like to see it, it's acceptable due to their very consistent revenues. And they have a very solid cash conversion of 87%, a profit margin of 56%, and an operating margin of 23%. So very solid numbers all across the board. The only issue comes here, where revenue has actually been decreasing since 2022, and adding to this, the margins have also decreased since then. And this is what I was talking about at the start. Although the efficiency ratios are at very solid levels, since for example the return on invested capital is above 25%, these have not been increasing in the past quarters and they have actually been decreasing since 2022, as these usually tell a very similar story to the previous slide. Now, when we look at their leverage analysis, they have been improving their financial position in the past 4 years, as they have maintained their total liabilities stable or even decreasing, while their total assets have been increasing, and they're now at the point where their total assets are almost more than double their total liabilities. And when we look at their fundamental analysis, this company gets a very solid 7 out of 8 ticks, as first of all, they have a very solid balance sheet where they can cover all of their current liabilities only using their short-term assets. This company generates extremely consistent cash flows, which it is able to actually grow organically, due to the main factor being their organic revenue growth. And by organic, of course, I mean that they don't depend on acquisitions in order to grow their top line. Now, what's great about this company as well is that it pays very solid dividends, and it also conducts share buybacks from time to time. And now the 2 points that I like the most to analyze about any single company, the pricing power and the existing moat, I'm happy to say that Qualcomm has them both. These two factors are very tied together, as I believe that the main advantage that Qualcomm has is related to their QTL reporting segment, which is where they actually obtain all the licenses and patents that the company has. This is one of the best forms of moats or competitive advantages that you can find in companies, because it basically means that nobody can compete with you on a certain technology unless they pay you for licenses. And this, of course, is where their pricing power also comes into play. The good thing about this is that it basically has no risk, as other huge companies will be the ones in charge of selling, advertising, and producing all the different technologies and the different products, and they will have to pay a royalty or an incoming fee to Qualcomm just for using the technology, even if the business doesn't work out. On the other side, Qualcomm's wireless technology and chips are one of the best in the market, and although the price power is being deteriorated in this aspect because of the rise and strengthening of new competitors, and other companies such as Apple are starting to build in-house their components, this is creating a very big risk for this very profitable niche that Qualcomm is also competing in. However, I believe that at the moment they have this under control, and their strategic initiative segment is the one that is actually providing for them that security and that wide moat that they currently have. Now, the one thing that I did not like was their low liability risk. So this is because they have an interest coverage ratio that is below 10 times, and I prefer companies that have this ratio above 10 times. Now, in regards to their dividends, they do have a very good dividend history where they have been raising the amount paid and their dividends per share for a very long time. In this graph, you can actually recognize that the dividends per share are actually rising at a way faster pace than their amount paid. And this, of course, has a lot to do with the fact that they're conducting share buybacks because they pay a similar amount, but since there are less shares, the dividends per share are actually increasing. Additionally, their payout ratio is of 42%, meaning that they still have a lot of room to run before they have some trouble with their dividends. In regards to their valuation analysis, they are currently trading on the more expensive side when looking at their historic PE ratio. Of course, it may not look too expensive because it's a 22 PE ratio. However, this company's top line and bottom line have been decreasing for the past 2 years, so this shouldn't demand a PE ratio that's too high. However, when we look at their free cash flow yield of 6.6%, it is way higher than the long-term inflation rate of 3%, which may suggest that the company is undervalued at the current moment. And regarding risks and possible challenges, the two main ones that I see are, first of all, the worsening competitive landscape, where this company actually looks like it's being beaten in their own core segment, which is the chips and the wireless technology products. Looks like they're now actually relying more on their patents and their licensing than ever before, and this could actually be dangerous because in that industry, it really depends on who is able to research the correct technology beforehand and then license it to the correct partners. However, Qualcomm is such an established business with such scale that I believe that they will be able to thrive under the correct management. And now secondly, the possible upcoming regulation changes. I believe that with how dependent they are on patents and obtaining licenses, this is always going to be a big risk for them because in the moment that a patent is decided that it will last 2 years less than it was previously stated, then Qualcomm will suffer big time. However, I don't believe that any of these risks will affect the company in the short term. Now, before we move on, please remember I'm not a financial advisor and this is not financial advice, so please do your own due diligence. However, I believe that this company has a strong competitive advantage, it provides consistent and predictable cash flows, and it has a high return on capital employed, meaning that it knows how to create value for the investor. So I do believe that this may be a good investment. However, their uncertain future prospects and the fact that their top line and bottom line have been decreasing in the past 2 years are enough to make me want to stay on the sidelines. So thank you so much for watching. As always, this has been the Cashflow Compounder. Join the free Patreon for extra content, and there's a link in bio for a free stock if you join Trade Republic.